Morning all. How are we all doing? How is everybody? Happy Monday. Morning, Robert, Edward, Edward, Eric, Peter, Christian, JC, Andres, Amy. Morning, Virginia, Alex, AZ. I have got your email, AZ. I haven't looked at it yet. Morning, Outro, Mac, Jerry, Peter. Morning, afternoon. You're in both. Time traveling. Morning, Gregors. Tom, how are we doing? Right, Monday, last week of the month. No, sorry, well, it is, but last week of the quarter as well. So big week this week. Morning, Jow. So last week of the month and quarter. Afternoon in Thailand. Oh, I see. Morning, Dev, Sarah. So yeah, basically, market moves in monthly and quarterly cycles, as indicated by these moving averages, monthly and quarterly. So we tend to find end of quarter weeks quite often have a lot of volume go through them because they're trying to balance books and things. So it obviously depends on the news a lot, but we do tend to get a decent amount of movement last week of the month and quarter. So that is this week. News-wise this week, we've had Oada apparently speaking this morning. I just literally, this wasn't, I didn't see this on the forecast on the news last week when I looked. And I've just had a look through the overnight news. There's nothing exciting been said specifically. There's very little news overnight, actually. Kazakh's just come out this morning and said they might pause in October, but nothing much else. So I was just going to quickly see if there's anything about FX in here. No. So there's nothing came out from this speech really that is going to potentially affect anything to do with the US dollar yen price and possible intervention. So we are stuck at the top here. Price has really slowed down as we've got up to this 147, 148 level. We're teetering at the high of last week. The high of last week just beat the high of the previous week. The high of that week was pretty much the same as the high of that week. So basically, as you can see, we've got 1, 2, 3 weeks now where we've not had enough balls to push any further on US dollar yen. So, and that's last month's high. So basically, in the last month, we've put in 100 pips, which is just about an ADR in the last month, higher than we were. So obviously, we know that the Japanese are unhappy about this price with the US dollar yen at the moment because it's devaluing the yen a lot, and they've threatened intervention. So there's nothing more we've had overnight so far. So thanks for the subscription, Colin. Hopefully you're a real person, and in a minute we're not going to have Helpy FX because Helpy FX usually subscribes just before they spam the chat. So welcome aboard if you're human. If you're not human, you'll be disappearing in a minute. Month ends a popular future strategy, yeah. Morning, Guna. Morning, David. So yeah, nothing over weekend. That's the biggest news we've had. It's just come in with Kazakh this morning about the ECB potentially pausing rates in October. Bit of a rally underway off that news. Couldn't make it up, could you? The market is just utterly ridiculous at the moment. We get an interest rate increase, which is bullish for the currency, and it drops like a stone. They say they're going to pause their interest rates, which is bearish for the currency, and it starts to rally. Yeah, this market is just nonsensical at the minute. It has been for weeks. Everybody's struggling with it. It's just everybody struggling with it at the moment. Nobody's really understanding this contraction, this extended contraction we've got. The indices are all over the place. Indices are not moving anywhere at all. No movement, just bizarre. Volatility is still down. We haven't picked up from the summer trading. People are getting killed left, right, and centre at the minute. It's just one of those weird periods you get. But morning, day trader. Morning, Neo. So yeah, we'll see what happens. So that's overnight news. News we've got this week. This morning we've got the IFO Business Climate at 9 o'clock. shouldn't really affect the DAX open this morning too much. It's an hour away. We've got Lagarde speaking this afternoon, and that's it. Tomorrow, there's no news apart from consumer confidence at 3 o'clock tomorrow afternoon, which doesn't really do a lot. Biggest news we've got this week is the CPI figures for the Australian and for Euro. And then we've got unemployment claims for the US dollar. So we've got Powell speaking as well on Thursday, which we need to pay attention to. But that's late night. So impact of that will be, if he says anything interesting, will be on Friday. And then we've got GDP for the CAD and the PCE for the US dollar on Friday as well. And obviously University of Michigan, which... so it's a very, very light news week this week. So quite often on weeks like this, at end of month and quarter, you get a big, strong move early week and then a reversal. So kind of like that midweek reversal. So big push and then undoing, because they're basically exiting positions. They're just getting themselves to levels where they can close out in profits, report them, stockholders, shareholders get paid, etc. It's just a manipulation to make money, basically. So sometimes it happens, sometimes it doesn't, but just be aware if we do get some big moves this week, that's what it is, because there's no news catalyst really to drive it. So morning, Astro. Right, DAX this morning. Downside potential this morning. We've got a small gap up today, very tiny. Not really worried about it. It's kind of opened up within here, so it's not really doing anything. But yeah, downside potential today is this area that we looked at. So this is where we caught the bounce on Friday off of the double monthly lows. That's your downside potential. Again, it's going to be the same level. Upside potential, obviously, you've got the yesterday's high in there. Markets open, broken short. You've got yesterday's high and then the previous day's high, which is that tiny little gap fill we didn't achieve, which is 100% of ADR. So if we're going down, I'd be watching that area there, which is a previous weekly low. I think that was 2 weeks ago. Now it'll be 3 weeks ago, won't it? No, that's a horizontal line I drew. Sorry. No. Why was I? Just a support I drew in, basically. Look on the hourly. So yeah, so obvious that area there, and this is the previous double monthly. Yeah, so we go back out. So it's that level and that level. Monthly low, bounced again on Friday. So if we break that today, off you go. There's literally nothing to stop it for a good 150, 175 ADR to the downside. So there's a lot of downside if it does break down today. And if it does break down today, what's wrong with this market? We still haven't got the gap fill done from July going into August. Huge gap there, which is very rare, very unusual to see something last that long in the market. It is. And as I say, we've literally had 2 months of sideways movement, haven't we? So, or a month at least. So very, very weird market conditions at the minute. Lots and lots of light liquidity. So your pre-market on the DAX is there. There's your 15-minute pre-market opening range break. You are short. Down to here, you're looking at something like 1.5 ADR to the downside. So if we can get a breakdown into that low from Friday, that would be pretty good. That gives you just over 1.5 R short. And then down into the gap, down into the previous supports is 4 and 5 R from that pre-market 15. So just about to hit target 1.5, 2 R on that to the downside. If you took the pre-market, actually got a break. Hasn't got there yet, though, is it? Morning, Philip. Morning, Kennelly. There we go. Nice, quick, easy breakdown today. Let's see if we get down into these lows and see what kind of reaction we get. So yeah, so that's news. Nothing overnight really, apart from Kazakh this morning, which seems to be slightly rallying that euro, but not particularly strong. If that's continuing, nah, it's faded, immediately faded. Didn't do anything, that news. Yeah, sideways. Pulling teeth, isn't it? This literally at the moment. Like I said last week, as soon as September's over, I shall be right. October. Now, banks, you've had a chance to screw us all over for 2 months. Now, if you could possibly get back to norms, that'd be good. Morning, Franco. Whip soaring all night. That's not good. So Euro, US dollar, we're on a 3-day contraction at the moment. Gone anywhere. Right. So we tapped down into those lows. We've found some limits. So this is obviously Friday, end of session. So we bought that level. We bought it again. We came down, retested it. That's where we basically closed out. So limit orders seem to be triggering at this level at the minute. We'll see if we can break through it. If we don't break through this level, back up into yesterday's high is the play, which is a decent move today. Four R up into the move, up the highs. That's off the pre-market. Obviously, the 5-minute opening range is going in at the moment. Not really a lot of volume is there today. Again. So quite a big candle going in. We've got 20 seconds to this candle close. So we'll see if we can break this low. If we can close below that level at the open, we've got a good chance of flushing today. There we go. We're at the lows. Let's see if we can hold it here. Okay, so there's your 5-minute opening range. So second option obviously is take a break of that. $38. So that's under a quarter of an ADR. So just about tradable. Not a lot going on, is there? A bit quiet. We haven't had a really good break for last week. There's not been a really decent move that's actually broken. I mean, we've had moves like this, which have just about closed long or short, but we haven't had a continuation move for a week now where we've actually broken, little pullback, and then off we go. Pick a direction. It just hasn't happened, has it? It's been sideways, sideways, sideways on the DAX. Nasty, nasty breaks. News obviously moved it, but other than that, horrible. Choppy, choppy messes, look. Choppy. Okay, we'll come back to that in a minute. Right, ADRs. Nothing today. So no overnight news. Nothing moved in Asia. So very, very quiet open in Asia. These ADRs, I have to say, are the smallest I can remember ever since I've been using ADR, which is years. Probably about 5-6 years I've been using ADR. I haven't seen ADRs this small before. This market is really, really, really squashed. I can't remember being down at 130s on Pound New Zealand. Pound New Zealand's probably the most volatile pair we have. Well, it is the most volatile pair we have. That's at 137. I'm used to trading that at 300, 350, 400, which is 137. So this is tiny. Look at some of these other ADRs we've got down in the 60s, 40s. I mean, this market is really, really squashed at the moment. So it's very difficult to use ADR as a measurement at the moment because I would expect this to get back to normal levels at some point. I was hoping it was going to be these moves we had last week off the news. And literally since we've had these news moves, we've just gone back straight into that tiny contraction, same as we had before, these tiny little ADR moves. News, nothing. News, nothing. That's all we're getting at the moment is market just knee-jerk reaction to news, nothing. Squash it. So waiting. We need something to liven this market up. Otherwise, it's just like pulling teeth at the minute. But So no ADRs there, no weeklies, obviously. We've only got 2 monthlies. Again, I'd have to go back through the last 3 or 4 years worth of videos on YouTube and live rooms, but can't remember many occasions where we've only had 2 monthly ranges hit. So this market hasn't even got to its normal monthly ranges. It's just like that at the moment. We're just not going anywhere at all. So the only monthlies we've got to look at are the pound CAD and the pound New Zealand. So pound CAD, I'm going to have to go out to the 4 hour for this because they're monthlies. Monthly starts here. So pound CAD, huge move down. So that is its monthly. It's only 100% of its monthly range, though, don't forget. It's just hit what it normally does in a month. It's the last week. It's hit its monthly range. That's normal. So it's hit its normal monthly range. It's not extended. It's just hit it last week. So some kind of pullback on this, some kind of profit take move. Look how far away we are on this pound CAD from the moving average. We looked at this one on Thursday, I think last week. You can see that high there. That's the furthest away we've been from the 24, which was 385 pips. Normally we'll get something in the region of 300s, you know, your 250s, 270s, 300. Yeah. At the moment, we are 423 pips away from the 24 moving average. That's absolutely huge extension. Way bigger. Like I say, I'm talking about, it sounds contradictory, doesn't it? Talking about the market being so contracted and not moving anywhere. There are a couple of things which are squeezing like crazy, but the movement on them is not large. Yeah, the movement on them is going absolutely nowhere. One big news event going absolutely nowhere. One big news event, nowhere. Little bit of a run, nowhere. News. Yeah, so that's what we're getting. Just news spike, nothing. News spike, nothing. It's very difficult to trade it. So we need some movement back, but obviously with no volatility in the market, what we need is positive pound news, negative CAD news, so that we're going to get some news spike, nothing. News spike, nothing. That's the way I can see we're going to go back. The normal movement we get where we get extended and stretched and then pull back quickly, not going to happen if there's no volume coming through the market. So these are good mean reversion opportunities, but you run the risk of obviously just getting what we've had, which is a sideways move. So until we get some volume, we don't know what's going on, do we? And New Zealand, same sort of thing. Big stretch. Sorry, not pound New Zealand, is it? Yeah, it is. Yeah, pound New Zealand, big stretch from that monthly high there. There's your weekly range here. I've got one long on that at the moment from down here. Yeah, looking for a pullback somewhere into the 24.72 zone. If it's going to break and continue to the downside, we don't necessarily know this pound is going to be weak yet. We need Bailey to say something, and Bailey's not scheduled to speak at all. He's not speaking at all. Radio silence. This is part of the problem at the moment. We get radio silence from all the banks, and then when they do say something, they just keep contradicting themselves and not giving us any information. So the banks are sitting there going, well, fine, let's go sideways then. We don't know whether we should buy it or sell it, so we just move it up and down and keep making money. That's literally what we've got. So those are the only two we've got to look at on the ADRs, weekly ranges, and monthly ranges. RSI's totally flat on the hourlies, sideways. So all we've had last week was we had those big news moves, and they've undone them. So obviously RSI's got a little bit extended and undid. Banked loads last week on individual singles, doubles, straights, in, out, 2-day moves, lovely. But got killed on all the squeezes. So very tricky. We've got some 4 hours to look at, but let's just see what the DAX is doing. Same as last week, straight back into the opening range. Inside bars. This is like pulling teeth, isn't it? I'm glad I'm not the only ones experiencing this, though. There's so many other people are like, I really need to look at what's going on. Because nobody's got any idea. So there's your 5-minute opening range. So we're an inside bar and a second inside bar on the 5-minute opening range. So there's your initial cash balance. The market's put its move in. Now it hasn't got any liquidity left. No volume. It's not going anywhere. It's stuck. Just got nothing, is it? This thing is hideous. Literally, I was chatting to well, not chatting to, but messaged by one of my old mates I used to be mentored with, who used to work in a bank. And he trades nothing but S&P, and he scalps nothing but S&P. And he said, "What's going on?" Basically, that was the title of his initial message to me. What's going on? Somebody that used to work in a bank that's a very successful scalper on the S&P can't make this work. It's just impossible. You just got to sit and wait, haven't you? So it's almost like take a month off, come back when the markets actually come back to life. But anyway, so yeah, there we go. Stuck on the DAX. So broken short at the moment, down into support. If it breaks long, we'll be looking probably up into those highs, which is yesterday's high. And then, yeah, see if we can get any movement off of that. That was Friday's movement, look. So that's Friday. The DAX. That's where we opened. That's where we closed. And we had news. Yeah, impossible, isn't it? But anywho. Right. So 4-hour RSIs. We've got a few to look at this morning. But again, they're not extended much. These are just about extended at the moment. So they're just at the 70-30 levels. 75-25 is when I really get interested. On the 4-hour, 80-20 is really the best levels. But I mean, we've had a couple of extensions to 80-20 in the last month. That's it, nothing else. So we'll have a look at these. But if there's any other pairs you want to look at, let me know and I will have a look. Oil, I'm going to have a look at that as well because we're waiting for a pullback on oil. But that's what I'm going to go through this morning. And yeah, there's nothing much else to talk about. It ain't moving. Can't do a lot with it. Morning, Daniel. Outro doesn't look like we're going to see any follow through. No. Morning, Marco. Stopped out for break even to the pip. Yeah. Good for you. I've got hedged and I'll remain hedged. I lost on that. I lost on everything last week. But basically, last week, I think there was one trade that didn't get hedged, which has made me look at this hedging strategy quite seriously because remember I said last, well, when I was talking about it before, but had a lovely exit there, look on the DAX. So this one, for example, was a lovely exit. So got out the shorts, no problem. Hedged out the longs, made money, no problem. But this takes manual intervention to do this. So what I was looking at was trying to get something as much automated as possible with the new hedging version of the EA. But every strategy has a point where it doesn't make money. So trend strategies fail when you are in mean reversion or range. Yeah. Breakout strategies fail when you are in mean reversion or range. Mean reversion strategies do not fail when you're in a trend, but they take a lot longer to play out and find it more difficult to make money. But you still can make money because in a trend, you still mean revert. So this is why everybody trades mean reversion because it works in all market conditions. With this at the moment, and I need to go back and look through the history on the indices. This period that we're going through at the moment is totally unprecedented, this last 2 months. But it's really showing the Achilles heel in any hedging strategy. When you get, not just with indices, but hedging in general, the Achilles heel of hedging is that. Because in a hedge, when you are trying, the only way you can make money hedging is by the market breaking out of your hedge. You haven't got breakouts this last couple of months. So any hedging strategy is going to be struggling. This is the problem with all strategies, isn't it? They all work for a bit and then they don't because the market regime and market conditions change. So you've got a lovely trending strategy, which is killing it. Then all of a sudden it gives the whole lot back when you go into range. Then it makes it up again. And then you go back into range and it gives it all back. You've got mean reversion strategies that make lots of money in ranges. Then it starts to trend and they hemorrhage all that cash and then they get it all back and then they hemorrhage it again, which is why you have to look at what's going on in the markets and adapt, use different strategies or have multiple different strategies running so that you can take advantage of every market regime. This is the problem with this one at the moment. Last week was a prime example. Every single day, pretty much every single trade got hedged. So what you're doing every single day is literally just locking in a loss, unless you get a big move which exits the loss, yeah, which is what this EA has tested. and has found that is the edge. Yeah. So if we get hedged, we wait for a big move, we get out of that big move and wait for the mean reversion pullback. And then it can do what the hell it likes. If it wants to trend, that's fine. If it wants to reverse, that's fine. Doesn't matter. We're out. We've made money. A la that move there. The problem is, in a market like this, you're not getting to the fives. You're not getting that far because it's doing that. That's where the issue lies. So I need to go back and look at how often that happens. I can see in the backtest results where the constant runs of losses are, so I can see what they are, and I imagine they're going to be this sort of market. So it's interesting. But as I said, this type of market doesn't happen very often. It's rare. It's rare to get sideways movement for this long. And these crazy moves we're getting on oil, we're getting the odd thing which is screaming in one direction, but there's no fundamental reason for it. Apart from that, everything else is stuck. Just weird, isn't it? But anyway, I was just going to catch up on the chat before I looked at those. Philip, can you watch oil? Yep. There you go. Watched it. Morning. It feels like everything is stalled until something big in the world will happen. Yeah. Something big in the world always happens. And this is why the markets move. But the thing that's big in the world that normally happens is a news event and a fundamental shift. The problem at the moment is there's no fundamental shifts going on because every single economy is exactly the same. They're stuck. Yeah. Everybody's interest rates going up. Everybody's inflation's going up. Everybody's unemployment is unstable. Everybody's GDP is struggling not to go into recession. Therefore, if everybody's doing the same thing, where's the advantage in any currency over another? There isn't. The area we've got to is critical mass on interest rates. And I think that's the thing that's slowing this market down at the moment is every single currency is talking about hitting terminal rates and freezing rates and not doing anything for a year. But every currency keeps going, oh, actually, maybe just one more. Yeah. And then the US will freeze and then they'll go, oh, actually, maybe just one more. So the market is just waiting for them to give some guidance as to, yes, we've got there. Trouble is they don't know if they've got there because this, every time they get there and they go, we've made it, this thing goes, no, actually, I'm going to go back the other way, which means you need to increase these again. Yeah. So it's the constant battle between the inflation and the interest rates, meaning the banks don't even know what to do. So, this is the problem, isn't it? We're all stuck. But we're not in a normal world at the moment where something will happen. Something normally triggers something to happen. It's just not happening, is it? Philip, I was joking about oil, by the way. I am going to look at oil. Is it wise to trade every month a different currency pair? Why? Don't understand. Why would you do that? You trade what moves. So if something's moving, you trade it. If it's not moving, don't trade it. Your job in this industry is to make money. And if something does that, you can't make money. If something's going like that, you can make money. Or that, or as long as it's moving, yeah? So you trade what moves. You don't go, I'm going to trade pound yen this month, and then I'm going to trade euro, US dollar next month. Why? Trade what moves. This is the whole point of strategies, basically. You get in and out when the market conditions are ready for an edge you've identified. That edge will present itself on a market. You can't say, I'm going to trade pound yen, because pound yen goes sideways for 3 months, you don't earn any money. If you've got a strategy which means it's got to do that before you do that, and it does that, we're going to do not pay the mortgage? Trade what moves. At the moment, not a lot. Outro, long jacks. Just about trying to get long. The trouble is you've got to get through all this lot as well. How many times have we seen this happen over the last few weeks? It's just painful. Anywho, we'll see what happens. Can you please check pound odd? Yep, have a look at pound odd. Pound odd's not on the list. I'll look at that in a sec. Catalyst, Chinese property market. The Chinese property market doesn't really affect all the other currencies, though, does it? Really? This is the thing. Gold, I don't know about gold. I don't trade gold. Basically, gold is very, very simple, Dev. What do you think the US dollar is going to do? Just do the opposite. Gold goes the inverse to the US dollar. So anything the gold does, anything the US dollar does, go the opposite way. So you don't need to worry about what gold's doing. You need to worry about what the US dollar is doing. So look at the news coming up for the US dollar, basically. Every day something different. I cannot close positions on MetaTrader 5. It says request adding. Oh, I don't know. That's one for MetaTrader, not for me. If CAD Swiss has another 5 days of rally, I'll surely be completely it will surely be completely unprecedented. Yes, it will. We'll have a look at that in a sec as well. Right, let's start off with oil. So oil's broken out, obviously, of the range, and then we'll have a look at pound odd, and then we'll go through the normal ones. So obviously, oil, we were targeting $95 a barrel, which was Goldman Sachs' forecast for the year. We got stuck in the range. So this is when they released their forecast of 107. Then they adjusted their forecast when they got down to here to 95. And then since they adjusted their forecast, this was December, we literally went nowhere all year. And August, we finally broke out of that range and made a move. So we're off to $95 a barrel. So we're looking for trend pullbacks at the moment to get in long. However, it could just accumulate and break. So I'm looking for long only positions on it, but I'm looking for pullbacks. And unfortunately, what we're not getting at the moment is any kind of pullback. The biggest pullback we've had so far was the one that I called here. And that's the only one I've said that looks like a good spot. And I didn't take it because it was a 38 retracement on that. Then I said to watch this equal move down to a 38, and we haven't got there yet. So there is potential for a pullback. So if this market from this position pulls back 38, I will get in. So 38 retracement basically is just pulling back to the 24 moving average on the daily. So somewhere in this accumulation. So that's what I'm looking for. At the moment, it's kind of got stuck over the last week. So you can see on the weekly, we're not going anywhere again. Yeah. So we basically had this pullback start, and I was waiting for, yes, we're on our way. Let's get in here. And all we did was go down there and sit there. And now we've sat there for 3 days sideways. So again, same sort of thing happening on oil as probably what we had here. We're possibly just going to get an accumulation and then break that accumulation. So looking for longs. So we've had the reversal alert on the hourly. So the market structure shifted back to the upside after we broke that low. So we pulled back into basically this area, broke back out again. So we are long bias, but we haven't had any follow through. So we just about made a new higher high there, which was a double top, and it pulled straight back off of it into the range. So we're stuck. So the options here are either we're going to do that, which is going to be sort of 175 to 200 ADR move down this week, or we're just going to kind of sit and grind sideways, or we're going to push the upside. So you could take that reversal alert as we're going to do that and go long from here, or you can wait for it to come back down to here and then wait for the next reversal alert to show you the structure's shifted back to the upside, and off we go. So we'll see. But I'm more interested in it down here. I'm happy to scale into a long on oil, but I just can't get an exit on it. So an entry on it. So, but that 95 seems very achievable from where we are at the moment. We're sitting on $90 a barrel. So it's got $5 to the upside, which is 3 ADR-ish roughly from where we are. So lots of room to the upside. But again, not really going anywhere. This is obviously helping the Canadian dollar rally as well. Hence the pound CAD move that we've looked at. Yeah, we've had a weak pound off the back of the inflation figures because inflation dropped unexpectedly. We've frozen our interest rates, whereas we were expected to increase our interest rates. So that's not helped the pound. And the Canadian dollar has been rallying off the back of oil, which is its biggest export. So boom, perfect storm. ADR. What? Things moving. Have a look at that sec. So that's why we've got that CAD Swiss move. So I'm scaled in long on CAD Swiss at the moment, waiting for that pullback. So it would be lovely if oil can pull back, because that will give the pound an opportunity to rally against the CAD. US dollar Swiss, ADR. Holy cow. This is Swiss Franc weakness this morning. So Swiss Franc very weak this morning. Euro weakened off that news. As I said, that's not positive news, Kazakh said this morning. Which is why I was surprised it was rallying. Doesn't make sense. So it's actually doing what it should be doing, which is dropping off of that news. So Villeroy is now speaking. Now we're probably going to get the complete inverse of that said and undo that, because they just keep arguing with each other over what they should do. Here we go. Testing until it breaks is not a sensible way to calibrate monetary policy. Maintaining the current level of interest rates will bring down inflation. So again, Villeroy's agreeing, forecasting with a freeze in October by the looks of things. So this is going to be bearish euro today. See if anything red comes out on that. So yeah, so there's your first hit of the day. So euro coming down, Swiss franc gets dragged with the euro, therefore US dollar Swiss obviously hits the upside. You'll get probably get ADR hits on a few Swissies today if this move continues. Pound Swiss is just about to hit. What's the pound up to today? Not a lot, I don't think. Not really going anywhere today, the pound. Sideways at the minute. So pound CAD, pound odd, wasn't it? Someone wanted to look at Marco. So pound odd, again, very similar. This pound very, very weak. I had an entry on the pound odd here on the H1M5 mean reversion. There was a second entry there as well. So I took that off there at that propulsion gap. Glad I did, because as soon as I took it off, it tanked. But yeah, I mean, you're due a pullback on that move. But pound's just weak at the minute. We've got Australian news coming out this week on Wednesday morning. We've got the CPI figures for the Aussie. Now, these are forecast increase, not just increase, exponentially increase. They are expecting their inflation to go up 0.3%. Let's just roll back a minute to the pound last week. We were expecting the pounds to rise as well. We didn't. We got a 6.7 off a 7 forecast. So these inflation figures, because interest rates have pushed so high, the inflation is getting more volatile because it's having the interest rate rises have a delayed impact on inflation. So they keep putting the interest rates up, and then inflation suddenly comes down quicker than expected. That's what happened to the pound last week, which is why we got that freeze on the interest rates on the pound. So we were expected to go to 5.5. Bank of England actually froze it at 5.25 because it came down faster than expected. So this week, obviously with the Aussie, we've got the same thing on the CPI. If it comes out as expected, I suspect we will get a continued kind of strength on the Aussie. It's a little bit strong at the minute, not massively, but it's not doing bad, holding up. If that comes out much higher than expected, we'll get a rally off the Aussie. If it comes out much lower than expected, we'll get a drop on the Aussie. So with the pound odd at the moment, that's trying to get out the highs at the minute. With the pound odd at the moment, as you can see, we've had this big rally up, big pull down. We're looking for some kind of upward movement. So where we are at the moment, if we're going to continue current market structure, kind of need to be on the 4-hour chart to see this. If we're going to continue the current market structure, now I've gone in too far. Yeah. So we've got low, high, higher low, higher high. This is your higher low. So market structure obviously is very bullish at the moment. However, this is the first time we've broken down below the 72 for the year, the whole year. Basically, we've been bullish. We've just been bouncing off the 24, 72, usual trend stuff. So we've broken down now, but this is still a higher low at the moment. So potential for a rally there. That's going to take the Aussie interest rates, Aussie inflation figure to be a negative. So if that Aussie inflation becomes negative, that pound will rally. So that's what's going to control it this week. At the moment, we've got a little bit of movement. So because it's the end of month, end of quarter, and we're running into a CPI announcement, we might find that we get some good movements off the Aussie and the New Zealand pairs this week, because they'll probably want to either get in or get out ahead of that CPI figure. So we might find we get some ADR hits on these running up to that figure, which is being released on Wednesday morning. So only got today and tomorrow to do it, though. So, but yeah, it's big, strong push down. No real profit take move on it. We had a little bit of a pullback there, which is what I got out of on that position. But I mean, if you look at it, it's not really pulled back at all. Not in the traditional sense of a 38, 50% retracement on move. We haven't had that pullback at all yet. So if it continues to the downside, we'll be looking at last month's low, basically. Sorry, that's 2 months ago's low as a potential bounce point. Failing that, I mean, you're looking miles away, absolutely miles away. So yeah, we'll see. But yeah, it looks good for longs still, obviously, at the moment. CAD Swiss we're looking at. Yeah, so I mean, this CAD Swiss, the Swiss Franc again this morning. We've just obviously had weakening, so it's off again, but not because of the Canadian dollar this time, because of the Swiss. This is the I keep talking about kind of the perfect storm and using it as an analogy. And all I mean when I'm talking about the perfect storm is you get intermittent news events which are bullish or bearish in sequence for that particular currency. So you get a bullish move, a bullish news event on the CAD, and then following that you'll get a bearish on the euro or the Swiss. Following that you'll get a bullish on the US or the CAD. Then you'll get a bearish on the euro or the Swiss. What it means is you get a news move followed by a news move followed by a news move followed by a news move, and all that happens is you get a squeeze because you're just getting nothing but positive news on the CAD, good US figures, good CAD figures, oil rallying. You're getting nothing but bearish news coming out of Lagarde, the Swiss franc interest rate not going up. You're getting euro CPI, everything bearish on that, which just drives it like that. If you get bullish news followed by bullish news, you get a big spike up and a big spike down. And if you continually get bullish news on both of them, the CAD being positive, the Swiss being positive, all you'll get is that. Because there's no fundamental bias for any currency to go one way or the other. What we're witnessing at the moment with something like this is oil prices continuing to rise through the roof. The US dollar rallying, nothing but positive news from the US, which drives the Canadian dollar, and nothing but negative news on the euro. Perfect squeeze, isn't it? It's just, you can't stop it. The euro just come out this morning and said we're going to freeze rates again. Great, that's negative for the Swiss franc. Off we go. Nothing you can do. So when you get into these situations, and it's rare for it to happen, but as I said earlier, it's rare to be in a situation like this where we're getting to this point where there is no positive news expected on anything. However, one currency keeps getting it. We keep expecting the US dollar to come out with some negative figures, and it just keeps surprising us. So you have to cut it at some point. So if you're getting into pain on this, I've only got 3 on this, I think. Yeah, I got 3 on this. But look where I got in. Back in September, middle of September. All we've had is like 2-day accumulation, news, accumulation, news, accumulation. Just had some news. Yeah, so we'll be getting into 4th. But you've got to look at it from a perspective of, if you look at it on the 4-hour, as I said, we are 157 pips, 3 ADR away from the 24 moving average. Yeah. Look at this one here, 170 pips. So pretty similar. Yeah. But look what happens every time you get this move. Look, we get that far away, we come back, we touch it. We get that far away, we come back, we touch it. Yeah. We get that far away, we come back, we touch it. We get that far away. We're just waiting. Yeah. For it to have the catalyst we need to start that profit take move. And as soon as one of the banks moves, the rest of them will jump on board to get out of those positions that they're in. We haven't had it. And all we're getting, and this is what I said last week, didn't I? If you're a bank, you're driving and you're suddenly in a load of profit on a position and you get another bank drive, thanks very much. And then you get a positive news event, which means that both of you drive at the same time. You won't stop driving as long as there's people willing to sell. Yeah, as soon as you run out of people willing to sell, you can't buy anymore. So that's where the squeeze ends. That's why they call it a squeeze. We're squeezing all the sellers until there's no sellers left. And then we go, fantastic, thanks for the money. And off we go, back down the other way. Just waiting. We haven't had it yet. So, yeah, not a good situation, CAD Swiss. None of these are. You know, you look at all these pound moves, the pound US, as you know, a squeeze, utter squeeze, horrible. Nothing you can do, taking losses on it. Not been through it before. You just don't get it. It just doesn't happen normally, because normally you get normal market movement. We're not experiencing that at the moment, are we? US dollar yen just dancing on the border of chaos. Pretty much. Pretty much. That 150 level is not far now. Not far at all. We are 225 ADR. Yeah. So it only takes a couple of news events and we're up at that 150. Then you want to hold on to your hats. So yeah, we'll be down very, very sharpish if we get back up to that level. But again, you know, this is the thing. You can see the reticence in the banks. They were worried about pushing it over the 147 peak that we had and the 145 peak that we had. Now we've pushed it over the 147. Now we're like, should we try the 148, 149? But look how long it's taken to get there. 3 weeks. We've done one ADR in 3 weeks, one ADR. They're too scared, as you should be. You should be scared, because if you go long on this now and it moves down 600 ADR, you are going to get hurt. Do not long anything against the yen while they are teetering with this. It's like a World War II unexploded bomb on a beach, and there's a load of kids around it with a stick going, you keep doing that, it's going to go pop. Yeah. So the US know that. This is why we're not getting anywhere. We're stuck. Even the news events, look. Yeah. Huge news event. Holy crap. Don't get that far. Yeah. They're just not interested in going any higher at any rate of movement. It's too dangerous. But you never know. Tom, yeah, you know things are bad when Lee gets excited about an ADR. I know. It's bad, isn't it? It is bad. I'm used to coming in here, you know, and just going, right, okay, ADRs today, we've got this, that, and the other. Bang, bang, bang. And we go over here and we look at the RSIs. Okay, so we've got some nice RSI extensions here. There's some good opportunities. Markets move. It's very easy, isn't it, normally? At the moment, I just feel like I'm lost. I think Tom Hugard summed it up. I was reading Tom's Telegram channel this week. He posted out yesterday a post. Status on September performance. I am concerned about the efficiency of some of my strategies. If it's putting doubt in someone like Tom's mind, who's an extremely experienced trader, if it's putting doubts in his mind about whether his strategy is now successful, that he has been trading for many years, like I have. Yeah, I've been trading this strategy for 4 or 5 years, no issues whatsoever. If someone like Tom is now sitting there going, I'm a bit worried about my strategy, it's not working. It's like, you can tell there's something really broken here, isn't there? It's really broken. And it's not me, it's not Tom, it's not my mate Dave, who used to work at Barclays, who trades the S&P. Everybody's experiencing the same thing at the moment. This is abnormal, very abnormal. Like I said, pound New Zealand trades at 300, 350 ADR. We're sitting on 137. That's just not normal. It's not right. It's either something is waiting to explode, or this is New World Order, and we've all got to really adjust fast. Quite how you adjust to this, I don't know. I mean, you just basically have to go range bound, and then at some point it's going to break out, isn't it? Yeah, it's just not enough money. What the problem, I think, and this is where I think people's strategies who scalp are falling down, like Tom's and like the opening range breakout at the moment. The problem is when you've got contracted movement, you rely on using a risk percentage of your account to make money and a risk reward ratio that's positive to make money. problem is, and this works in mean reversion as well. So if you were mean reverting that move, yeah, typically in a mean reversion, you're looking for 1.5 to 2R. Typically in a breakout scenario, you're looking for something similar. What we're seeing is we're not quite getting the movement fast enough, which means that you tend to exit those positions, which may have just about got to where you wanted to before they come back again. So people are taking either break-evens or losses more regularly than they normally would, because normally that, like I said, that movement we've seen here would be like a bang, 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 bang. So what we're seeing is we'll think about it, and at some point when you're not looking, we'll go and hit the target and then we'll come back again. You can't make money doing that because you've got to control the risk. You've got to shorten your risk when the trades don't play out, and therefore they just take you out with small losses constantly. So it's like chipping away at your bank account. That's the scenario that we're in at the moment. And it's not just on the 5-minute time frames. It's on all time frames. Yeah, you can't make money when the market is just going, haha, told you. Because you just, breakout traders aren't going to make money. Trend traders, because it doesn't go, aren't going to make money. Mean reversion traders have seen the breakout and haven't taken the mean reversion, aren't going to make money. There's only 3 ways to make money: mean reversion, breakout, and trend. This current situation, this current market regime that we're in, does not suit any style of trading. The only way you would have got into something that you may have made money out of is if you were lucky enough to get into something like this on a trend. And then you would have found it very hard to hold it when it was constantly doing nothing for days on end. Yeah, you're sitting there for 3 days after you've entered a trend trade going, not working, screw it, I'm going to cancel it. And then it goes, oh, here's an ADR. Actually, no, I'm not going to go anywhere. Oh, here's another ADR. Yeah, doesn't suit that either, does it? Just bizarre. As I said, I've never experienced a market like this before. It's just horrible. And like I said last week, it's nice that I'm not the only person sitting there saying the same thing. Everyone is sitting there going, what the hell? Even the central banks are sitting there going, where are we going? What do you do with it when the banks don't know where it's going? It'll change. It will change at some point. We just want to know when. You have a link to how you use ADR to make trading decisions. Yeah. So if you go onto the website, into indicators, the ADR reversal indicator, you don't have to buy the ADR reversal indicator if you don't want it, but that video there explains ADR, how ADR is calculated, how it works, all the research I've done into ADR, the maths behind it, basically. So I'll put the link in the chat. But as I say, ADR actually is one of the few strategies at the moment that is actually working quite well, because what we're experiencing is these new spikes which mean revert very often. So look at US dollar Swiss. Yeah. So on US dollar Swiss strategy, obviously we hit ADR, we drop down to a low time frame, we wait for a structure shift back in the opposite direction. So there's the market reverse alerts indicator. Yeah. So as soon as that comes back down from there, we get the pullback. Yeah. So if it rallies from here and shoots up further and we get up to like 125 ADR, we get a nice tight reverse alert, 125 ADR, what we're doing is we're mean reverting the pullback. Don't care if it does that or that, doesn't matter. We make money on the bank's profit take move. Yeah. If an instrument moves beyond its average daily range, it gets exhausted. This is what these numbers are. 23% of the time it moves beyond 125. It only moves beyond 150, 12% of the time. Only moves beyond 175, 6% of the time. If you hit 175, there's a very high probability you're not going to go much further. Doesn't mean it's coming back. Could go sideways, but it means you're not going further. So you've got an edge, haven't you? There's 3 outcomes when you hit that level. Continue, sideways, or down. That's the only one that loses you money. Therefore, your odds are suddenly 66%. You're either going to get out with a break even or a profit. Ta-da, there you go. That's it. It's simple maths. Yeah, that's how trading works. It's just mathematical probabilities. So this is why this is working so well at the moment, because what we're seeing is a lot of this and then a big spike. Yeah. After that big spike, what we're getting a lot of the time is an A-shaped or a V-shaped recovery out of those spikes, because those news events are not real news events. If we look at the euro moves. Yeah. Yeah, Ollie. Yeah. We're just getting these recoveries happening. So there's another one there. Look, thanks for the subscription. First Gmail Rostom. Thanks for subscribing, First Gmail. Is that your very first Gmail account? Oh, that's sweet. Welcome aboard. So yeah, I'm just trying to think of news events that we had last week. US dollars. Yeah. So this is what I mean by a V-shaped recovery. Big news spike. Nah, actually. Yeah. These big moves are just reverting. So any ADRs you take, so that move there from there down to there is 70 ADR. So that's 120. So you're looking at somewhere in the region of 150 ADR. Whoop, straight back out. This is why ADR is working so well at the moment, because we're not getting any follow through on anything. It just hasn't got enough legs, because you get a news event and the market's like, oh, quick, we need to get in or out. And then the analysts go through the scorecarding and go, actually, the long-term impact on that isn't really going to be much. Oh, right, okay. That's literally all we're getting, because they're not getting any guidance where the Fed or the Bank of England or Lagarde for the ECB is saying, this is what we're planning to do. We've had that for the last year, because they've been saying inflation's going up, we're putting up interest rates. Inflation's going up, we're putting up interest rates. What they're saying now is inflation is stabilizing, coming down. Sometimes it might go up. We don't think we can put this up much more, because everyone's going to get unemployed and the GDP will crash through the floor. So we're going to stay where we are. Unless that goes up anymore, then we might tick it up once. So the market's like, it's like that. You're waiting in anticipation for something to happen. And for 2 months, it hasn't come. We're stuck. I don't quite know what the catalyst is to get us out of this cycle that we're in either, because they're not going to put the interest rates down for a good 12 months. So what do we do now? Sit here for 12 months waiting? Some of the banks need to tell us, because not us, the banks need to tell the banks what the hell to do next, because they don't know. Abnormal Markets is facing problems with order execution. I don't use them. They apologize and promise to fulfill all orders as sent initially. Go and read your contract with Abnormal Markets. They will fulfill your order, but probably won't be at the price you asked for. AZ, I've been thinking about getting out of it, but these banks can't buy forever. They have to sell eventually. They will sell eventually. Yeah. I mean, this is the thing. They will sell eventually. The problem is, it has to be in their interest to sell. And the problem with a squeeze, with position trading and a squeeze, is you have to be able to survive the squeeze, which is why we're getting small, because we can live through weeks of squeeze, no problem at all. The problem with these particular squeezes is not so much the length of them, it's the way they've got there. They've either been massively quick and aggressive or ground. But whichever way they've done it, either ground over a long period of time or aggressive over a couple of weeks, whichever way they've done it, there has been absolutely zero pullback on anything, because there's no real reason to. That's the bias. And this morning, that was extended by the euro saying, we're definitely not going up in October. Brilliant, thanks. No reason to buy the euro, is there? Sorry, Swissy. Yeah. But we have got the possibility of oil on a pullback. So it's just, they will buy and they will sell while it is financially beneficial for them to do so. If they are buying the Canadian dollar on the strength of oil pricing and that oil pricing doesn't change, there's no reason for them not to do that, because all the time there are people willing to sell the Canadian dollar for another reason, which isn't oil-based, they will do so. Yeah. So if they think the Canadians are going to reduce their interest rates or freeze their interest rates, or if they think that the inflation is going to drop in Canada, they will continue to sell the Canadian dollar, whereas the banks will be going, oh, oil's still going up. That's their main export. We're interested in oil growth and GDP growth, which is what's going to help. Oil is going to help Canada do that. So it's difficult, isn't it? You can't pick a point, but you just have to get out of some of it. So I'm getting out. If the pound drops today, I will be getting out of just over 50% of my pound position. and I'm going to take a big loss. I'm going to take about a 15% loss this month. It'll be big. And this week is it. It's if this week. So it'll be the first time I've taken a 10% plus loss. That hasn't happened ever. But I'm not willing to sit in these squeezes any longer. It's too long. And the thing that I'm worried about is one catalyst that changes this outlook to be properly bullish. Yeah. So if you look at the bias scorecard at the moment for the fundamentals, look at something like the CAD Swiss. Yeah. So the CAD Swiss is neutral. So if that thing can move that far on a neutral bias, where the commitment of traders is showing there's no futures interest long or short. Yeah. There's no fundamental bias long or short. The CAD and the Swiss should be moving nicely. Yeah. If it hasn't been moving nicely when we're expecting it to, and let's say, for example, the Euro CPI comes down, the CAD CPI jumps, and the Bank of Canada come out and say we need another interest rate rise, and that actually happens, the interest change suddenly becomes a 1, the inflation change becomes a -1, the GDP, let's say they get a positive figure in the GDP from the Canadians and the Swissies don't give us one, that suddenly becomes a 7 or 8, they suddenly buy in the futures market, you are stuck at the top of a squeeze as it's about to move. That's what worries me about specifically things like at the moment, the pound that I'm in. So I'm in the pound US dollar, as we know, which I've been in for 2 months. Look at it's a sell, right? But the reason this is a -6 here is because retail are -2, because retail are buying the crap out of it. Why? Because it's been coming down, so we need to buy it. But they do this every day, and they are constantly buying this thing up, obviously, because it looks like it should be going up. As we know, it looks like it should be going up. But there's no futures bias. What I'm worried about is Bailey or the Fed giving the futures market a reason to buy or sell the pound or the CAD or the US dollar. If that happens, this suddenly becomes a -8, -10 potential 2-month move. You're stuffed. You've got to get out. But at the moment, we are stalling on all of this stuff. We are getting to a point where the market is, look at this. Look at the news we've had. Huge news, 50% retracement. We've pushed up. We pulled back under the news spike the following day. There was no continuation. We pushed it. We pulled it. We pushed it. We couldn't hold it. That is the start of what becomes a market structure break. Unfortunately, the euro today, for the CAD Swiss as an example, has pushed it up again. But if you get that reversal alert there, and then we break that low, if you look at it on a higher time frame like H4, what you will have achieved is a reversal alert. Yeah, first structure break. We haven't had a structure break on this since here. 2 months ago was the last time we had a break in structure. All we need is that catalyst just to go bang. And all of a sudden the market will be like, oh, hang on a minute. We haven't made a new high this week. They'll suddenly go, right, probably time to start scaling out some of this. As soon as somebody does it, the rest will follow suit. Haven't had any reason, have they? So, tough, very, very tough. Is what it is. House of Pain. Morning, Amar. Have you had a look at Aussie dollar yen? No, haven't looked at Aussie dollar yen. Haven't looked at anything yet. There's nothing to look at, basically. So I'm going to go through the RSIs, but Aussie dollar yen's not on there, so I can look at that. And let me just quickly see what the DAX is up to. Nothing. So if you took the 5-minute opening range break today, well done. So the 5-minute opening, let's look at it on the other platform. It's easier to see on the ORB EA. So if you took the 5-minute ORB today, good job. So the 15 pre-market break to the downside gave you 1.5 R, which is what I kind of recommend as a target on the pre-market, 1.5 to 2 R. So if you took the 1.5 R, well done. You made money on that short today. If you took the 5-minute ORB today, which is that line there, you have done a 1 hour, I think, by the looks of things. Doesn't look like it's made 1.5 today. Yeah, 1 hour to the upside on the 5-minute ORB, almost a 1.5 hour up. So the pre-market short was the play, and then the 5-minute long today. But from a, you know, if this comes all the way back down here today again, you know, and sits and flops around, it's just. And this is why the ORB works, because you need to make money when the market's moving. The market really only moves for a little bit at the open. That's it. It's not getting any of this follow through that we're used to at the minute. So, but good moves on that today. Just not for me, because I took the pre-market and didn't get to target. Never mind. Aussie yen. So Aussie yen had a short on this last week. So we had an H1M5 mean reversion set up, which was a lovely short, straight in, straight out next day. That is the only trade I've had. Oh no, I've had two actually. Sorry, I've had one back here in August. So one trade again. This is a prime example of what this market's like at the moment. I had one trade in August. I've had one trade in September. Not easy, is it? So I would be looking only for shorts on everything yen based at the moment. I would not look to buy the yen. I would look to buy the yen. I wouldn't look to buy the Aussie against the yen at the moment, because if the US dollar yen continues to rally, we will get that yen intervention. That yen intervention will drive the market down. We just had some news coming from Bill Roy. There we go. God, that was like magic, wasn't it? If I can do it again. We should come out of the inflation and come back towards the 2% target by 2025 while avoiding recession. So it's forecasting a 3.2% drop in the next year, without that dropping 0.1, which officially will take them into recession. You know, see what I mean? It's like, yeah, mate. Yeah, and pigs might fly. And if you're going to hold your interest rates at 4.5, yeah, when everybody else has had to get up to the 5s just to try and get this down, and it's not working, why not take a leaf out of the US book? We're at 5.5 and our inflation's going back up again. Not high enough, is it? You're sitting on 4.5 expecting it to come down in a year. Honestly, I don't know where they get this information from. I get it. They're economists. They're trained. I'm not. But at the end of the day, it isn't working, is it? None of it's working. We know none of it's working. We can see none of it's working. But they obviously have some kind of magic ball that they can see under the hood, because they've got it wrong for 12 months and they got it wrong last year. So why on earth for 2 years have they got it wrong and suddenly they think they fixed the problem by putting interest rates up to crash the housing market, which is about to happen because no one can afford to buy one? How's that going to help your economy and avoid a recession? That's what causes a recession. I just don't understand them. But anyway. So yeah, Aussie dollar yen selling, because the only reason I'm a sell on all pound Swiss. Oh, there you go. It's a Swiss franc. We know. I said earlier we're going to get some more hits on the Swissies. So pound Swiss, ADR to the upside. That's again Swiss franc weakness. Watch that area. Watch 150 ADR today. Very nice resistance. You got 150 to 175. You got resistance. 200 ADR. 175 resistance. 200 resistance. Again, this is partly why we're stuck where we are, because every time you get a push up, because we've just done nothing but go sideways for 3 weeks, there's resistance galore. So every time we get a push, we get a load of people that said, nah, we want to sell it from here. What do? Get to one of those levels and everyone goes, we can't get any higher. So they move it back down again. Look at this. This is a perfect A-shaped recovery. I was talking about A-shaped recoveries earlier, yeah? New spike. Blah, 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 blah. Straight back to where we started. Literally within 2 or 3 hours. Knee-jerk reaction. No, it isn't what we thought. Yeah. So ADR's beautiful. So drop down M5, pound Swiss. Wait for that reversal to come in. So wait for the reversal alert, which will trigger short. CAD Swiss, monthly range hit now on the CAD Swiss. That's pushing. Still pushing out the highs. Not ADR yet, but that is your monthly range now on the CAD Swiss. So that's the third monthly range we've got. That's the ADR dash. The RSI dash, sorry. Yes, CAD Swiss now, monthly range hit. So that's only its normal monthly range, which is obviously contracted at the moment, but that is its normal monthly range we've hit. So don't forget the monthly range hits are a little different. So with the monthly range, we're using the 12-month instead of the 10-day, 12-week. So 12-week is a quarter. That's a year. That's 2 weeks. So the monthly, we're using the average over the last 12 months. So 10 of those have been normal trading conditions. Yeah, the last 2 haven't been. So the average monthly range is still pretty accurate. So when we get to our monthly range, we don't often go beyond it. So 60% of the time we stay within our monthly range. When we get to it, we don't go beyond it very much more. So yeah, so all the ends obviously sells because of the intervention risks that we have at the moment. Is it, you think, incompetent central bank management and or government doctoring of numbers? Don't know. It's difficult for the governments to doctor numbers, I think. With economics, it is what it is. I don't think you can go, oh, we've got more or less unemployed than we have. We have. It's a number. It's not something I don't think they doctor. I don't think so. Anyway, but conspiracy theorists may do. I don't know. But it's more mismanagement. Yeah. The alarm bells, I mean, it's easy to say now, isn't it? The alarm bells were there. If you look at the S&P from COVID, yeah, the alarm bells were there. COVID hits. Yeah. The world locks down. Businesses shrink, go bust, borrow ridiculous amounts of money to stay alive. Sales plummet. The stock market rallies. While all this is going on, the stock market makes the biggest move it's made in decades when no one is spending any money. Yeah. When no one's got any money. When businesses are closing, people are losing jobs. Yeah. This thing rallies like crazy. What did they think was going to happen to inflation? And what did they think was going to happen to unemployment and everything else when we suddenly go into a massive drop when everybody starts to spend money? Yeah, it's just every sign was there, every signal was there that we were going to need to put interest rates up. And yet what they did was wait for interest rates to get to 3% or 4% and then go nudge it up by a quarter. No, nudge it up by 1. Get on top of the thing. They didn't get on top of it. So what they did was they waited for inflation to rise, and then they started putting interest rates up. What they needed to do was put interest rates up above inflation so they'd get down on top of it. All we've done is we followed it. What do you expect it to do while you're following it? Go up. It's just not going to happen. It's just, they just got it wrong. Got it totally wrong. Pound especially, the Bank of England were miles behind the curve. Miles behind. That's why we got up to double figures. We were sitting over 10% on our inflation. Because we just didn't do anything with this. We didn't move it. Then they suddenly had to do it faster and faster and faster. Then everyone's mortgages went up and up and up. And then 2 years later, everyone comes out their fixed rate mortgages and goes, what do you mean it's doubled? My salary hasn't doubled. What's next? Housing market crash. That's what's coming. How's that going to affect inflation? It's going to go up. It's all wrong. It's all totally wrong, and it's going to continue to go totally wrong. And this is why the banks are stuck. They don't know whether to do this, that, or the other, because we haven't been through this. No one's been through this. No bank has lived through this thing that we're in at the minute. Yeah, we've never had a pandemic, come out of a pandemic into a ludicrous market that doesn't make sense, and then have something go completely catastrophically wrong that's out of our control. And then all of a sudden the war kicks out and kicks off in the middle of it, which completely crashes the food market and sends inflation double through the roof. So not only do we have inflation going up, we then had the war, which doubled it. Energy prices. Never had energy prices up at those levels. Still are up at those levels. Food prices. Never had them up at those levels. Why? Because Ukraine supplies all the grain to the entire world. What's not happening? We're not getting any grain. What do we need grain for? Pretty much everything we eat. Nothing's changed. We're still in that situation. Doom and gloom, isn't it, really, if you think about it? Just is. It is what it is. You've got to deal with it. The nice thing about this job is it doesn't matter if it goes up, doesn't matter if it goes down, doesn't matter if it goes sideways. As long as it moves, you can make money. We're just having a contraction of movement at the moment. That's the thing that's causing problems, isn't it? But even if the fundamentals continue to go against, surely we have no choice but to do a profit take move. They will if they can't find anybody left. Yeah. So there's, like I said, if there are people willing to continue to sell, they will be able to buy. Or exhaustion, elastic band theory works on the fact that you hit exhaustion. Yeah, so one of two things happens. When the market is stretched, it either hits exhaustion in the fact that there's no one left to exploit, and then we get the pullback. That is a 38 or 50% retracement if we're going to continue, or it's a V-shaped recovery if we're going to reverse. We don't know which. We just know that when that profit take move starts, we can benefit from that. Or we hit a level where the market previously was not interested in going beyond because there was a fundamental or an economic reason why it wasn't financially viable to all parties involved to contract business below there, which is why we have price discovery moves to see if it's possible. If it's not, we come back. Yeah. So when you get exhaustion at a level of previous rejection, that's a double catalyst. Yeah. At the moment, there's nobody willing to stop selling to the banks. Therefore, they will keep buying because they are in extortionate profit at the moment on the moves. Therefore, there's no reason to get out of the moves. If you can make more, you will do. Yeah. If you keep going, I've got a load of this to buy, and someone goes, I'll have it, and you've put the price up from 64 to 67, and there's still people wanting to buy it. Think of it like a market. I'm selling apples, right? My apples are 50p. I'm selling them 50p. They're going flying off the shelves. They're 60p, flying off the shelves. 70p, flying off the shelves. 80p, flying off the shelves. 90p, flying off the shelves. Jesus, what's wrong with these people? 95. Keep buying them, guys. Why would I stop selling my apples? I'm not going to. The banks won't stop until everyone goes, yeah, no laugh. 67. I'm not changing my money back at 67. Right, okay. Then we stop. Bang. Then we decide, can we push further? Or should we go back? Yeah. Or we're going to hit an immovable object, resistance. Resistance is 225 ADR away. Can you survive to 225 ADR? Highly likely you are going to get a big reaction at that point. Yeah, which is why support and resistance works, because we know there are a massive amount of people wanting to sell at that level because it's not viable to take it up there. It wasn't then. Whether it is now, we don't know. Yeah, this is back in 2023 in May, earlier this year. So in May, they didn't want to take it above that level. Do they want to take it above that level now? Don't know. What was the oil price back then? Down here somewhere. Where's the oil price now? Up here somewhere. Is it going to be the same fundamental there? We don't know. Until we hit it, we'll find out. Because either there's banks, institutions, and hedge funds sitting there going, we can't let CAD go above that level against the Swissy because of XYZ, or they won't. All supply and demand driven. But when you're this extended, the snapback tends to be quick. Look. So that obviously big extension that we had there, look, you have a big day and then a pause and then a big day. And this is why I say, with position trading, we try to keep our price within an ADR or 150% of ADR, because when the pullbacks happen, they happen fast. That's an 80 pip move. This is a 46 ADR. That's a 200% ADR move. Pause day, then another day, 70, 150 ADR move. So we moved 350% of our average daily range in 48 hours. Yeah. Look at where my average is there. And look at what 2 ADR is from where we are now. It's here. Yeah. So that's 2 ADR to the downside. There's my average. That's where we are now. soon as that pullback is underway, we're done. Yeah, just got to survive it. That's the thing. That's what position trading is all about. This is what the banks and institutions are doing. They're scaling into things and then scaling out of things. The moment they're scaling in, they will scale out. Doing exactly the same thing. It's just doing it in reverse. That's all at the moment. That's how it works. We just have to wait. Got to be patient, but there's no guarantees. And this, this is why I say in the bootcamp, if you're uncomfortable, you can cut it, or cut 50% of it, or cut a third of it, cut some of it. Bring yourself back to comfort levels and say, right, I am on the CAD Swiss now at this level. When we get to, what was it? Put it on the chart. That propulsion gap, basically, isn't it? 68. So when we get to 68 up here, there's a high probability we're going to find limit order triggers, and they will trigger those limit orders. We'll try and push back, and then they'll go, nope, and they'll add to it. We'll get a market structure break, and then we'll shift down, and then we'll go down X amount of distance. Don't know what it will be. If you can't survive to there on the CAD Swiss, yeah, then what you can do is you can remove 50% of that, remove 50% of that, remove 30% of that, and then that allows you to survive until that level. You can add another one in when we get to 150 ADR if there's a reverse alert, and then you can add another one up there. And then you can profit from that move. So you can get out of some or all. So at the moment let's look at my pound US dollar, for example, as an example. So it's pushing down again today. I have got my stops set here. Yeah. So this is going to be my loss line. It's within ADR today. This could easily get hit today. Yeah. What it's going to do, it's going to close that. It's going to close that. It's going to close that. And it's going to close that. Fully off, gone, goodbye. I'm leaving that on. There's a double there, so I'm leaving one of those on. I'm leaving that on. I can't remember. It's one. I can't remember exactly which ones I've put stops on. I don't care. I haven't calculated it mathematically or anything. I've just said I want out of at least 50% of this if this pushes down again today, because I don't know when it's going to stop. I do know we've got support coming up, but I can't survive another 125 ADR. I'm not willing to take that much extra squeeze on it. So I will be out of it 99% of the time, as I've said. When I get out of something like this, which is once a year, if that, that's when it bounces. Because I'm looking at it the same way as everyone else is. They're just going to go, nah, no more. And then there's no one else willing to do this. No one else is going to hit the buy button anymore. So they have to get out. They have to become buyers in the market. But, that's the reality. There's nothing you can do about these situations. It's just one of those things, But it happens, like I said, this is probably the worst, along with the worst squeezes I've been in. I've been in 3 major squeezes in my life. This is one of them. We haven't come out of summer trading. I think that's what the problem is with this one. We have not come out of summer trading volatility. September hasn't picked up. It's the first time I've seen September sit the same as August. We haven't had it. Yeah. Pain. 'Tis pain. Bella, hello. I have bought the EA. Does that mean I have the ADR indicator? If you've bought the market reversal alerts EA, the ADR indicator is built into it. Yeah, but you don't use the EA as a visual tool. You can do, but I wouldn't recommend it. It doesn't draw the same. The EA is designed to be stuck on a chart and trade. It's not designed as a visual tool. But it has got the ADR. It will draw the ADR lines for you, yes. But you have to turn it on. So if you, in the market reverse alert EA, if you put it onto, put the EA into alert mode, and then you, with ADR filter, you have to set ADR filter to true, and then that will draw the ADR. If you set it to false, it won't draw the ADR. So you have to have that set to true, and then it will draw ADR for you. But just bear in mind, when you flick between pairs, it won't update properly. It updates on candle close, so it won't suddenly update properly. It's not designed for that. But yes, you can in theory. Franco, sorry for me. These are the days you just go cook a roast and come back tomorrow. Yeah, exactly. They have called John Wick to look at the crystal ball. Yeah. Hello, Mr. Wick. Yeah, we've got a problem. Can you tell us, is inflation going up or down? That was a really bad example. That's what I imagine bankers sound like. In the UK, obviously. Afternoon, Ismet. Morning, even. If the US enters a housing market crash, will that mean the dollar plummets as well? Difficult. The housing... It's difficult to tell. We're just hitting support on the pound US, by the way. You're on it. This is weekly support. This is last week's low off the news spike. Yeah, so basically it's difficult to tell what happens in a housing. What the problem with the housing market crash is, it tends to be very slow to start with. It kind of bubbles, things start to slow down, things start to contract, and then the speed of contraction is very, very quick. It's more like an implosion. So in the UK, for example, house prices year on year have dropped 5%. We've been going up forever. And then we went like an RSI. We hit the 18 and then we've started to roll over. Comes down very, very fast. The reason it has to is because people can't afford to buy houses. So if I've got a £500,000 house, for example, and I've got a mortgage of £350,000, if the next house I want to buy is 600,000 and now interest rates have gone up, I can't actually borrow enough. I can't buy that house. So if I can't move up the property ladder, I'm just going to stay where I am. If I stay where I am, housing stock drops. As housing stock drops, the market slows down because everybody's like frantically looking for something to buy. There's nothing out there. So when you put your house on the market, it tends to go very, very, very quickly. But if people can't afford to buy the houses, basically, they have to drop the price of the houses to get it to run up. So when you get a point where people haven't got any disposable income because inflation is too high, they basically stop spending money. And that just slows everything down, which is why we need to keep on top of inflation, to keep the economy healthy, to keep the housing market healthy, to keep everything healthy. 2% is perfect. But the bubbles in the housing market tend to be very, very, very quick, because as soon as that contraction starts, that 5% drop starts, everybody suddenly jumps on, and the housing stock starts to move quicker and quicker and quicker. And then you would expect what's happened is prices would generally tend to do that. The problem is house prices can't do that because people's interest rates are too high. Therefore, they can't afford the mortgages to make the houses prices do that. So if you want to sell your house, you need to get on the market quick before the prices come down too quick. So it's just a spiral basically that is caused. So the problem with it obviously is it affects everything as well. So the banks and the interest rates, there becomes inflationary pressure, there comes interest rate pressure. Everything just becomes more of a powder keg, which is why I've been saying for a couple of years, this is just the start of it. This inflationary rise and this interest rate rise is the start of the problems, because people's wages are still not going up, and they're not going to move those interest rates for at least 12 months. So you're stuck with a higher mortgage for 12 months. You can't spend money, which will tend to bring inflation down. But businesses will start to lose money, which gives us negative GDP, puts us into recession. Then the job market explodes because everybody loses their jobs. What does that have effect on the monetary markets? You can't tell, because it just doesn't work in that way, because it's just not the housing market doesn't really affect what the business relationship between the pound and the US is that way. makes everybody poorer. Also, landlords are throwing in the towels, as Virginia's just said as well. If you've got rental properties, you've been renting them out for ridiculous amounts of money. If the housing market's going to collapse, you've usually got quite a large mortgage on a rental property, so therefore you need to get rid of it because your mortgage goes up too high. So what happens is all of a sudden you come out of your fixed rate buy-to-let mortgage, your mortgage goes up to there, you go to your tenant, I need to put the rent up by 100%. Your tenant goes, no, and then you go, all right, I'll get a new tenant. Oh, there aren't any because no one's got enough money to pay that much. I better sell the house. So then you lose your housing stock in rental, which drives a whole new wave of problems. The whole economy is screwed, basically, isn't it? I mean, this is the problem. Anyway, this has nothing to do with Forex analysis, is it? It's just the world, basically, is in a bit of a sticky situation. What percentage is the drawdown for pound US? 7. So I'll be taking a 3.5 on it today, roughly. Maybe a bit more. Might take about a 4% loss on it today, which will take me up to 13% for the month. I expect to do a 15% loss this month, as I said, which will be not catastrophic. You know, when you look, you got to put it all into perspective. Yeah, my P&L has done that for years with the odd blip. Yeah, so that's a P&L. That's what it looks like. Everybody's P&L looks like that. Yeah, this is one of those. They happen every now and again, but it doesn't matter. Yeah, overall, if you can make 100 to 150% return a year, yeah, and you have to take a 10-15% loss once a year, you have to take a 10-15% loss once a year. The years you don't take a 10 to 15% loss are the years you make 150% return. So, you know, it's all part of the long term. The problem I've got with this month, not me personally, well, it is me personally. The problem I have with this month is it's the first time I've had a loss off the back of a bad month. Yeah. August was 7%. This month is going to be a loss. Normally what happens is a 10%, 15%, 25%, somewhere around there. When you get a 7%, it's like, that was a crap month, followed by a loss. That's what I've not experienced before, because these market conditions are pretty damn unique. So, for position trading, you know, opening range breakout's done fantastic. I've made a lot of money out of ORB over the last couple of months. A lot. This last week, though, has been awful. There's swings and roundabouts, isn't it? You have big ones, you have little ones. Long term, that's what all we're interested in. Is there an edge? Can we make money long term? The intricacies of the market on a day-by-day basis, irrelevant. Doesn't even come into the equation. It's just frustrating. As I said, for someone like Tom Hurgard to turn around and go, I think the system's broken. And I'm sitting here thinking, this isn't working. It's just not working. Nothing's working. Doesn't matter what you do. Go and flip a coin. It'll work just as well as everything else at the minute. There is no edge when the market's not moving. Izzy, probably a bit worried about the CAD Swiss squeeze. I'd probably be worried about the CAD Swiss squeeze if everything else was also in a squeeze, but it's the only part of pair that is not. Yeah, exactly the same as me, though. Yeah, I mean, this is exactly the same. Look at my portfolio here. All right. That's at 7%, but it's only at 7% because I've got 2 aggressive drawdown control positions on. If I didn't have those 2 aggressive drawdown control positions on, that would be sitting somewhere around about the 5%. Everything else is absolutely fine. I haven't got a problem with anything. Just that, and it's been that for 2 months. Yeah. The longest squeeze I've ever been in was might have been the Aussie New Zealand. Middle of October. The beginning of December. You see that squeeze there? That's pretty much the longest squeeze I've been in. 6 weeks. Yeah. We're 2 months into the pound US dollar, and it's not even a squeeze. It's a I don't know what it is. It's just not something the market's done before. It's that thing, isn't it? It's not that's a squeeze. That's the market squeezing the shorts, squeezing the longs. This is just grindy, continual crap on this pound US dollar for the 2 quietest months of the year ever. It's just an anomaly. It's just weird. But this is why when you're doing back testing, and I've shown you this many times before, you use a bell curve. Yeah. So this is the norm. Anything that falls within here has got a very high probability of being repeated. Anything that falls out here, which is usually the set files everybody puts onto MQL5 when they build an EA, they go, hey, look, I back tested it and this made X, this made X. But if you actually backtest a system parameter permutation with 2,000 variations of your strategy, you'll find that 90% of them fall in there and they only make about 10 quid. That one that made 100 grand ain't ever going to happen again, mate. It's a fluke. Yeah. Where we are at the moment with the pound US dollar, I think is here somewhere. I've never seen it. I've gone back through the charts. It doesn't do it normally. It's just weird. We've got August dead, normally fine. We know August is dead, always is. Then we get September. What we've had is August and September inside of August. That's not normal. That is not normal. If October's inside of September, we know there's a massive problem somewhere. If that happens, I shall be down to 1 minute charts, flipping coins. It's not going to happen. Right. Anyway, first strike will be credit card debt, then auto debt, then housing becomes a burden people walk away from. Yeah. Credit card debt. I mean, credit card debt in the UK, I don't know about the US, but credit card debt in the UK is unbelievably high at the minute. Even I've got a credit card. I haven't borrowed money for, we will go through these RSIs in a minute. I haven't borrowed money for, I don't know, decade. I put a holiday on the credit card this year. First time in a decade. And I make decent money. But I couldn't quite stretch to buying the holiday at the time, where I was normally, I'd go, here's, buy the holiday. I couldn't do it this time. I was like, ooh. And that sounds really stupid thing to say when you've got people that can't afford houses and can't afford food and things, but it's affecting every single walk of life completely. I'm thinking this year about not getting a car. Yeah, I get a lease car every year. I'm thinking about not doing it this year because it's an expensive way to do it. Everybody's thinking about cutting back on everything. And, you know, when we look at where we are with inflation at the moment, where we are with interest rates at the moment, as I say, this is the tip of the iceberg. We haven't seen the start of this problem that we've got coming. But anyway, sorry, let's get off the depression, shall we? Many here are cutting back on selling non-essential assets. And selling non-essential assets, yeah. If you can cycle to school, and you don't need to give the kids a lift, sell the car. I will get onto this in a minute, honestly. But while we're talking about it, I was thinking the other day, I've got this lovely new car sitting on the driveway, and it's done, I've had it 2 years, and it's done 6,000 miles. And I'm thinking, what do we use the car for? Yeah, I live a mile away from the sea. We can walk there. The kids walk to school. Family all lives pretty close. Shopping is all delivered by the supermarkets. We've got restaurants around the corner. Don't need to drive there. We've got really good public transport that gets us into the town. I live right next to a railway station. What do I use the car for? Very, very rarely. I went to Brands Hatch yesterday to watch some racing. We drove to Brands Hatch because it's an hour and a half away. Have to. Haven't got a choice. However, there is a train and a bus link. Yeah, I could get rid of the £700 a month outgoing that is my car. That suddenly fixes 90% of my problems. Seriously think about doing it. Or just buying a really crappy little car just so we can get from A to B when we need to. But those are the decisions people are making at the moment. And, you know, the impact that it has on interest rates and everything it's all to do with unemployment and stuff, because you can't get more money out of your employers. So if you don't want to lose your job, you will not be taking a pay rise. You have to cut everything else. And that's what brings our inflation down. And it's the only way we can keep our houses, basically, at the end of the day, isn't it? What's the most important bill that goes out? Your mortgage. Why? Because if you haven't got a house, you're stuffed. But anyway, and now the councils are going bankrupt. Yeah, as Alan just said, all the councils in the UK are going bankrupt. So the people that run our towns and cities can't afford to run our towns and cities. It's just a nightmare, isn't it? But anyway. No shame in not waiting to lose what you've worked for, not wanting to lose what you've worked hard for. Yeah, no, I know. I mean, that's why I drive a 200cc scooter. Exactly. £700 is your rent. Exactly. It's all relative. Yeah, I've got a lot of friends, right, that aren't as well off as I am. I'm not well off, right? I don't make £1 million a year, right? I'm not a millionaire by a long shot. I'm comfortable in that I make enough money every month that I can pay all my bills and have extra and put some away. So I've got disposable income, as they call it. You work as much as you need to earn. I'm not the sort of person that wants to work and earn enough money so that I can have an unlimited pot of cash. I would much rather work for 3 to 6 hours a day than work for somebody else for 8 to 10 hours a day and never have to work a weekend and never have to think about anything in the evenings. Yeah. That's my goal in life, is not to be a millionaire. It's basically to retire at the age of 55, 60. And up until then, I want to work sort of 20 hours a week. I'm achieving that and I've got plenty of money. But somebody in my position and somebody that earns enough just about to pay their rent every month, we are equally getting squeezed because you live to your means, don't you? Yeah. So where I have a nice new car every 3 years, someone else will replace their car every 5 to 10 years with a second-hand one. Yeah, we're both in the same position. He's now going to have to replace his car a little bit longer, and I'm not going to have that car, and I'm going to go down, and he's going to go down. Everybody's being affected equally, unless you are somebody that has more interest than God, and they basically don't need to work. Those are the people that should be helping us all out. Funny enough, one of them is a multi-billionaire, and he runs our country. Anyway, enough about politicians. Not having a dig at any politician, they're all crap. Anyway, let's do some analysis. CAD Swiss. There's no point in doing this one, is there? We've already talked about it. 4-hour RSI extension. So the only ones we've got, these ADRs we've looked at. CAD Swiss extended on the 4-hour. We know all about this one. Big, strong push up, waiting for a pullback. We've got extended back here. That's when I entered, which was the H1 M5 mean reversion. It was also the H4 M15 strategy entry. 2 drawdown controls done, 3 positions in, waiting for a pullback on that move. Yeah, so pullbacks will be typically, depending where you measure this one from, you can either take it from here or take it from there. Personally, I prefer to take it from here, just because that move there has pulled back. That move, I suppose it has a little bit, but it's part of the start. So it doesn't matter where you measure it from, really. But 38, 50, 61.8 retracement will be a continuation move. Yeah, so we should look for it to come down to at least this sort of area, which is 66,500 when it does, which is 225 ADR. 2 ADR push back down, we're done. That's all we need. So big, strong push. As I say, we've been squeezed on this for over a week. We know that. The Euro Swiss, same sort of thing. Extended. Actually, no, it's not the same sort of thing. Sorry. That is just got extended to the upside. Just about, actually. We had an alert on this last week, which was the H1M5. So that 4-hour just got above the 70. We're just above the 70. Could trigger on 75 today. Yeah. It's already pulled back, though, so far. So that was an H1 from last week, straight in, straight out, and that was off the news. I got out because I was unsure as to whether we were going to still weaken this Swiss franc. Again, the Swiss franc hasn't helped itself by not increasing its interest rates. It said it was going to, didn't do it. So again, just negative news. So Euro Swiss extended, Euro Pound, that's extended on the 4-hour, that's extended and embedded. We're up at monthly resistance. That is a beautiful looking high there, look. Okay, so that's your previous monthly high from 2 months ago. We've just hit that. If you drop down to M1, H1 rather, we've hit it, just tried to get through it and rejected it. There's your reverse alert just gone in, which is just retesting at the moment. So that looks like a lovely short. M5, there's your reversal alert. Big push up, rejection, down. So looks nice as a short. Euro pound, that hasn't been helped by the news this morning. So yeah, nice big drop on that one. Pound, unsure as to whether it's strong or weak, but this is moving a little nicer. Still not particularly nice, is it? Look, this is what I mean. These are the grinds we're getting. These very, very, very tight channels. No pullbacks, just grinds, basically. Very, very difficult to get out of positions on them because you're just not getting those pullbacks. You're not getting half an ADR, 3/4 an ADR. You're getting a little bit or a sideways move. So, sorry, not getting an ADR. You're getting like 1/4 of an ADR, half an ADR. Not enough to get out on, basically. So that's extended on the 4-hour, only just though. The pound CAD, again, extended. We know this is massively extended. This has been extended on the 4-hour RSI multiple times. So, you know, like going back into here where I got into the first H1 entry as well, we've been extended and embedded below the 30 level now for over a week and a half. We've literally not been able to get above that 30 level on the RSI. Just stuck fast. But we are at the moment putting in a potential either flag break or a break in structure. So on the hourly, your reversal alert is going to trigger there. Yeah, that high. So we've had this big, strong drop down there. So there is a kind of break in structure starting where if you break that high, you're going to get a run on that high, and that would be the break. So that would color in, and obviously that would be your break in structure. But we are at the moment stuck. So again, literally big, strong push. Are we going sideways for 2 or 3 days? No. But nicely extended on the hourly, nicely extended on the 4-hourly. So pound CAD, we know, obviously that's a big, long, big, strong push. Pound New Zealand and pound US. Pound New Zealand, again, collapsed. We had a big move last week on the Australian New Zealand dollar. Absolutely took off. No real news catalysts on it either. So possibly positioning ahead of the Australian CPI figure coming out this week, in which case then we could easily see that V-shaped recovery forming. So get move like that. But yeah, nice entry. First entry on that one, triggered already. That was an H1 M5 mean reversion from Friday's big, strong push. Big ADRs on those on Friday. Pound US we know about. That's extended. That's dropping again. Just catastrophic collapse on the pound. Strength in the US dollar. Just trying to see if this is US dollar strength. US dollar yen's pushing again. Need to get some yen, something short against the yen. Yeah, everything's dropping against the US dollar. So this is US dollar strength that's causing this pound US dollar drop. So this is US dollar strengthening up. New Zealand dollar Swiss, again, I'll just, if you're not in it, don't touch it in a minute. Totally unsure which way that is going at the moment. This US dollar's just nuts. New Zealand dollar Swiss, one short on that from Friday. So that's an H4 extension. That was an H1 M5 entry on Friday. We've just taken out the high of last week and rejected. So if we get that reversal, we're pushing back down into propulsion. And US dollar Swiss, as we know, that's an ADR hit today. So drop down M5, wait for a reversal on that one. And just wait for this US dollar to weaken up a little bit. But no news today to drive this, really. We got the German IFO business climate, which came out at 9 o'clock. That was a positive. Didn't really do a lot, did it, to the euro? Good old euro. Bit of positive news. Let's drop. Yeah, nothing moved it. So that's it. That's all we got there. DAX, nice break to the downside on the DAX. I'm approaching 5R. the downside on this. So I'm just going to close these out, I think, here. Oh, how close are we to ADR? Pretty close. Okay, so I'm closing the DAX shorts. We're at yesterday's low. We've dropped very, very fast and hard into yesterday's low. And we've got some buyers starting to step in. We're also approaching ADR. So ADR is just down there. So there's potential to take another position down there if necessary. But going to see if we can basically just get a pullback up into that level and then exit the long positions up there. That'll be a banker for the day. So 3 grand banked on the shorts. Net 1,300 in the hole at the minute. So yeah, nice move on the DAX, but happened way too late. Way too late. So we're an hour and a half in now. So it took basically an hour for any movement to really kick in. So that was the German IFO business climate, I suspect. No, it wasn't even that, was it? That happened 10 minutes after that German news came out, so that wasn't the catalyst. It would have gone straight away if it was. But yeah, nice big, still pushing down. So we're pushing down into ADR. So hopefully we'll start to see some signs of exhaustion down there. We should come out of inflation and come back towards 2% target 2025. That was what we talked about before. So that was positive German IFO. 8:52, we still had news coming out of OADA. Oh, just at one bit. We cannot preset the timing of the policy change. Nothing exciting. Right, that's everything today. Birmingham Socialist Council. They know best how to spend other people's money. I don't know. I don't get involved in politics at all because, and my wife drives my wife nuts. I don't believe that you can vote in anybody that is going to do any good anywhere, because there is always an agenda somewhere to get into power, and then when you have that power, that agenda that got you into power most of the time falls by the wayside, gets reversed, and then you have to do whatever else they tell you to do from there on in, or you have to unpick the crap that the people before did that you didn't agree with, that got you into power, and once you've unpicked that, you create a load of other crap. So there is nobody that gets into power that can ever do a good job, because it's impossible. The economy and the whole world is screwed. We're burning the planet. We keep starting wars, and everything's going wrong. So it doesn't matter who you put in power, does it? Socialists, put Bill Gates in charge. He'll set everything up and give it all to charity. That still won't work. It's not going to happen, is it? This is why I don't vote. I do vote. But I don't stick to any party. I vote for whoever looks like they've got the best chance of getting us out of whatever mess we're in at the moment. And that changes every time. So, local governments, doesn't matter who you put in charge. They don't give enough. They've never been given enough money, local governments, to do anything, have they? So, local councils. DAX at recent lows, limit orders here. Yeah. Hopefully, we'll see. So that's like 5, 10, 15, 20, 25, 30, 35 minutes straight down. They'll be wanting to pull that back at some point soon. To some degree, I should imagine. And as I say, we're down at ADR. The problem with the DAX today is on that downward break, there's not really any support coming up. So if you go out, we are now at ADR. We've got this area here, which is a couple of highs, which is around about 175 ADR. Between where we are here and that, there's nothing. So there is actually clear space to drop another 50 to 75% of ADR today. But we'll see if there's enough volume to do it. And they might just pull back and grind down into that area. It might be a catastrophic drop. So I will look for signs of strength, basically, on it. So we're at ADR now. There we go, ADR hit. So as you can see, I've got a buy stop here. That buy stop will trail the high of every candle as we drop. And as soon as the bulls enter the market, I'll be in with a second entry. So hedge out. But if this continues to drop, I shall continue to go with it, and then we'll take the second buy when we get some buyers on board. But that's the trouble. So we've got ADR, 175 ADR. So it's going to be, what's ADR? 1692. So that'd be about 100. So it could be down to somewhere around there. But I doubt it'll collapse 175. There's no news to cause this either. There's no reason. But remember what I said right at the beginning of the stream today? This is the end of quarter, and you quite often get big moves and then retracements because they are scaling out of positions, and then they'll undo those scale outs, which is where we get that midweek kind of reversal happening. So this could be, the start of a move. Look at this candle though on the hourly, yeah? So just look at the DAX now. This is the biggest move we've had for over a week. Yeah? That's the biggest move we've had, literally, in a week and a bit. In one candle. The most volatile move we've had. So we might be getting some volatility back into the market. This might be the week. And then October, there will just be back to business as usual, and everyone will be going, I don't know what the problem was. Well, that'd be nice. Right, I'll leave it there. So yeah, DAX obviously starting to pull back. So there's your ADR hit. Easy to see on the on this one. Yeah, so straight into ADR. Run out of steam. Nice pin bar candle gone in. Or hammer, whatever you want to call it. So push back. There is your high resistance. We've got this area of resistance as well, which is previous day's low. That's obviously yesterday's low, but I would expect to push up into previous day's low or that area there. Any of this propulsion to the upside is obviously a target to the upside. So we'll see. But I mean, that might just be a pause candle and it might continue down. We'll wait and see what happens. But watch price action. But looking like we've got some buyers stepping in, which is good. Okay, I'll be back this afternoon at 2:20. We'll have a look at the US indices, see if anything's happened further this morning. News-wise today, we've got Lagarde speaking at 2 o'clock. You never know. She might suddenly come out with some harebrained idea that's actually going to rally the euro. But I don't think she's going to say anything particularly impactful. So no more news today. We've not really got any news now until tomorrow afternoon, until the consumer confidence comes out for the US. So just movement, basically. All right, so have a good one. Anything you need, I'll be in Telegram. I'll be back 2:20 this afternoon or 7:50 tomorrow for the Frankfurt session as usual. Have a good day. If I don't see you later, have a good one. I'll see you tomorrow.